Yesterday, oil suffered steep losses. However, it's too early to talk about a trend change. After all, the asset has added more than $10 in just over a week. Thus, a local rebound in the market was necessary from a technical point of view. Yesterday's macroeconomic calendar was bereft of any important releases, which allowed the market to enter a local correction. China reported a rise in the number of new coronavirus cases. This means that the Chinese authorities may adopt fresh curbs, which could significantly reduce global energy consumption. Moreover, the risk of a global recession is still high. Nevertheless, the market situation remains unchanged and oil has every chance of resuming its bullish run. A slight correction, which may well continue today, is expected to be followed by further gains. Thus, the asset may try to break through $100 per barrel and close Friday's session above this mark. Brent crude oil futures had about 1.5% left to reach the $100 level, but a pullback occurred. From a technical point of view, it was needed as the market was extremely overbought. As for a further upward cycle, the situation now depends on whether traders manage to return the quote to the $100 level, and this would mean that upside momentum has not fizzled out. Another signal of an increase in the volume of long positions will come after the price consolidates above the control level on the daily chart. Until then, the pullback can be seen as a valued move. Gold continues to lose value, which is in line with both long-term and medium-term forecasts. After all, the greatest pressure comes from a monetary policy pursued by major central banks. Moreover, the regulators intend to keep raising interest rates. However, the yellow metal looks oversold, which points to a possible rebound. And this will hardly happen today. Most likely, a rebound will take place tomorrow and will be sort of the market's preparation for US inflation data to be released on Thursday. According to technical analysis, gold futures not just bounced off the resistance level of 1,730 last week, and they gained a strong downside momentum. Thus, there is a shift in investor sentiment relative to the recent upward cycle. If the price fixes below $1,650, the metal will most likely hit a new low. Notably, such a steep decline will hardly go unnoticed by speculators. Thus, one cannot exclude a possible pullback. Meanwhile, the ruble is still trading downwards, while there are no strong driving forces behind its decline. Apparently, this is a temporary phenomenon caused by certain changes in the exchange market's structure. And last week, the yuan trading volumes surpassed the dollar trading volumes for the first time, and this stems primarily from a sharp drop in transactions with the US dollar. As a result, a gap between the exchange and over-the-counter markets occurred, which in turn led to a local currency deficit. This is quite possible when the market is being transformed, which is currently taking place. Therefore, the current dollar's rally against the ruble seems to be a temporary phenomenon, and the market will inevitably adapt to new conditions and correct the resulting imbalances. Then the Russian currency is expected to resume gains. However, given rising tensions in Europe, the greenback will hardly fall below 60 rubles. In the meantime, the dollar-ruble pair rose above the level of 63 rubles per dollar for the first time since July 7. Interestingly, the price has repeatedly derived from the 60 mark over 3 months, even though it has been range-bound. Thus, for a trend change, the price first needs to consolidate above 65 on the daily period, and the signal will be confirmed after the price stays firm above the level of 67.50. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.